p.m. But for now, let's get a better read on what's going on within the internals of the market and how people are positioning. So let's get you up to speed with today's options trading. Abigail Doolittle is looking at this year's rally for stocks and whether it can continue. Abigail?
Well, it is really pretty fantastic at this point, Scarlett. We are off to the races. That NASDAQ 100 close to being out of a bear market officially and maybe in a bull market, depending on how you determine it. It's interesting because Fed Chair Jay Powell yesterday, it seems as though some people think that he was a little bit hawkish. Some people think he was dovish. At the end of the day, though, it comes down to price. Alan Nuckman, Bullseye Option, thanks for joining us today. And you have something that I really like, the idea, or you have a thought that I really like, the idea that the terminal rate, it's not so terminal.
Right. Had an extreme hike, a series of hikes over a period of time, but the markets have been forecasting where this was going to end. And it was going to end around the 5%. And that looks like it's still in place. And you're seeing volatility decrease. And you're seeing the markets revive as we get closer and closer to that eventual end. So I'm a thinker. I'm a trader, not a thinker. So I trade what the markets tell me. And we're seeing a breakout today and seeing obviously a build on that bottom that's been in place. And we had so many positives in January. We had the Santa Claus rally with that first 5 days positive, and then we had the January effect. So it looks like a good setup for 2023. But then again, I'm usually bullish.
Another quotable, Alan. I'm a trader, not a thinker. Well, if you are trading price right now, the trend really seems to be reversing higher with that S&P 500 back over October's high. And it's so interesting, the volatility, that VIX below 20 as we do get closer to that terminal rate. So are there any headwinds that you are looking at ahead, or do you think that we are up and away into a new uptrend?
Well, I'm more concerned now that we've had more than a 15% bounce. We're closer to the highs in the S&P than we are those recent lows. But I'm going to say it again, and it's going to shock your people, that Powell has played this absolutely perfectly. We've got the VIX down. We've got the dollar down. We've got stocks up. We got interest rates down. We've got inflation down. We've got unemployment down. So I've got no complaints. If you want to parse words, parse words. But it's performance that we're after here, and the market has performed very, very well.
Yeah, I have to agree with you. You know, the Fed has a history of doing this where they introduce policy that's at first very controversial. The markets don't like it, and I've learned this the hard way. Ultimately, the market tends to meet the Fed. I mean, it's somewhere in between, but closer to the Fed. We do have some big tech earnings, though, after the bell. Any thoughts there?
Well, a big bounce, so it's hard from a risk reward standpoint until it backs off a little bit, but this is a big breakout in the NDX. What I'm looking at is the Dow. The Dow's only up 2%, whereas tech is up about 20%. I think the Dow has been trading between 33,000 and 35,000. A breakout sent us to 37,000, and guess what? That's new all-time high. So I like Intel as a play there. The Intel June 25 call is my option play there. It's trading for about $6. It's $5 in the money. So I think Intel, which was a stock that was cut in half, hasn't participated yet. I think that's a good risk reward for the big picture.
And so when we connect this to the VIX, that volatility tell, which so many tell me is not a fear index but an uncertainty index, it is still below 20. Right now it's at 1890. Where do you see the VIX going longer term this year if you are so bullish?
Well, slowly grind. But let's remember where it was. It's not, necessarily where we are. It's where we aren't. And we aren't at 38. We're below 20. We were just below 18 yesterday for the first time, new year lows. But it wasn't so long ago that the VIX was grinding down and it was below 10. So, there's still more downside in the VIX and there's more upside in stocks, especially with the negativity that there is still remaining in the market, that people aren't believers. So that usually puts a little bit more pain for those people that missed out.
That's a great point. There's been such bearish sentiment out there that could create a lot of room for catch up. And especially, again, with that VIX volatility going down with the terminal rate, who knows? Alan Nuckman of Bullseye Option, thank you for joining us for Options Insight today. And from New York, this is Bloomberg.